Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down about 0.39% there. On the S&P at 0.9%, semiconductor 1.8, Dow flat, Russell 2000, transport, banks, energy, biotech, healthcare, home builders, utilities, retail, emerging market, every single sectors are red today. Bitcoin down, gold, silver miners are up, dollar down, oil up, treasury bond flat. The rates are down. VIX popped a little bit there. Let's stick with S&P 500 ETF. Spider! 65-minute chart here. So this is what we closed yesterday. Looks like we actually saw a gap up this morning here. You can see this is where we open here. And quickly that gap was halfway filled on the first hour. It looks like second hour, finally, the up gap from this morning was completely filled. Not only that, we lost the micro-term moving average right about here. You can see that long lower wick. And then we got to the secondary moving average, which is my short-term moving average here. Short-term moving average has been acting as solid support for the bulls in the last several sessions here, as you can see, and that was a second hour. And with that, we did have a little bit of pop on the third hour and fourth hour. We got to the resistance area once again. It looks like we did see some of those upper wicks there, not able to advance, and looks like the bottom fell out on the fifth hour. We lost the micro-term and the short-term moving average towards the end of the day. So you can see we're now back below the micro-term and the short-term moving average. We closed right underneath it. So as you can see, the short-term micro-term sentiment has been shifted unless bulls can get back up tomorrow very, very quickly, at least in the first 2 hours, to reclaim the micro-term and the short-term and stay above it, right? It has to happen quickly because it's all about the momentum when it comes to the market. So if we don't see the buyers reclaiming the micro-term and the short-term in the first hours of tomorrow's trading session, you might assume then maybe if we do see maybe a little pop or something like that, that micro-term could continue to act as a resist. So you can see the micro-term and short-term moving average coming here. If we do see maybe a little pop but not able to reclaim advance above both of those moving average, what could happen is prior support could act as what? New resistance. And both of those moving averages could act as resistance and come right back down to the next level of support, which is 406. That 406 been served as a support here and here, as you can see. And you might wonder what that that purple dotted line is all about. Well, that's a support line coming all the way from the lows here, as you can see, coming all the way from the March 13th here. It's coming from this low here, and then you can see here, and it covered here and also here. So it's actually pretty solid uptrend support, because you can see about 4 times or so all throughout the month of March, and this actually saved the market. Is becoming, you know what I mean, disastrous, because you can see March you had a really ugly price action, a lot of fear here. So you can see that price action, and I think a lot of times when we see that sort of type of action, a lot of people are expecting to see continuation with the lower highs and lower lows. So really that uptrend support really kind of, protected the potential rollover there, a continuation of rollover, and that was that rising uptrend support, that pink dotted moving, and then that's coming into right here, coinciding with the horizontal pivot. So that 406, and I really will look at this entire right here, right? 406, I'll really look at this entire 406, 40. I'm not trying it very well here. So that 406, 404 or so, right? There you go. I really look at this as going to be a band of support, right? And that this level obviously act as kind of that pivotal level. It acted as support all throughout February here. Strong resistance in the early March. and all throughout early April did act as support. So this is definitely that pivotal level and coinciding with that rising uptrend support there. So 406, 404 is the level that bulls want to protect, not to mention my midterm moving average is currently residing right underneath that 404 there. So 404, 405 or so, that's where that you see that middle or that blue dotted moving average, it played a crucial role right here before this thing pretty much went vertical. So you can see we have a lot of levels colliding in this vicinity. Perfect. We got the horizontal pivot with 406, 404. We got the rising uptrend support in that vicinity and the midterm moving average as well. And not to mention, we got this up gap right here also in that. So this is gonna be the level, the battleground as the bears, these bear troops push the buyers down. Can the bulls sustain this level with the help of the midterm moving average and the gap area and the rising uptrend support? However, I think a lot of bears are going to argue this is going to be the M for murder, the double top pattern. That might be so. Again, a lot of these levels, you need to see how this market is going to behave before we can get into any kind of conclusion. Let's check out that oscillator. What that oscillator looks like curling back down here, and it looks as though the oscillator is not seeing sort of sideways move like we've seen during early April. And this one looks a little bit more like a rollover there. So we're quickly dwindling down. Bulls decided it's going to rest. They got tired. Failed to bring that oscillator all the way to the top of his band here. It would have been better if they brought it up just a little bit more. So we left a little bit of spacing at the top, and that might, insinuate a buyer's strength here.
What?
What the bears really need to do is bring that oscillator all the way to the bottom, like bottom. Remember, bears were not able to do that. We've been talking about this since middle March, and you can see there's a spacings here, right? Bears are not able to bring that oscillator all the way to the bottom of his band, and when that happened, what happened? The uptrend was established. So now as this oscillator is coming down, it's imperative for the sellers to bring that oscillator to the bottom of his band. But let's say if that oscillator looks similar to, because right now, let's say you see here, right? This is kind of similar to this. Let's say this oscillator comes down to here, similar to here, and then it crosses back up. That's gonna have that effect where this rising up trend could continue. Perfect. Remember, right here, right? There's a lot of craziness here after the Fed minutes. You see that long bearish Mariposa candle. A lot of people believed that was gonna be it for the bulls. We're not gonna see 400 ever again. I think I read it somewhere on Twitter that some people are saying we're never gonna see 400 ever again. Well, with that oscillator reversing right back up without hitting the bottom of his band, bears already shown weakness there, and that's when we did see that uptrend, you know what I'm saying, developing very, very fast, and it's shocked a lot of people.
No sir, not me.
That's what I'm saying here. If this oscillator does not come all the way back down, but if we crosses back up here and you are anywhere here, that's going to be bad news for the sellers.
Perfect.
So let's see how the market deal with this vicinity. I think this market potentially still vulnerable, and bears are, boss bears are not going anywhere. It's still, you might still see a lot of bloody action, but if some of those levels hold, if the oscillator crosses back up, you'll be surprised how resilient, you know what I'm saying, that uptrend can stay in. But I'm gonna come back for you. We'll reassess the situation. Enjoy your evening. Go train tomorrow.